to talk about the clauses in personal insurance. So I will try to keep you all from falling asleep, but it is very important. So basically, as it also said previously, insurance means the transfer of risk. So as a client, by paying a monthly sum to an insurance company, you are handing over the risk of having to repair or replace your possession at own cost. But then what exactly does insurance companies pay for? Why are there exclusions? Why are some claims rejected even if you pay your premium? So, as most things in life, we are bound to our insurance by a contract. In short-term insurance, the schedule and the policy wording count as the contract. So we can break the clauses down into terms and conditions, endorsements, and exclusions. These clauses are there to help the insurance companies manage their risks and to ensure that the clients do their part to manage their losses. For this presentation, I will highlight only a few terms and conditions, endorsements, and exclusions due to the time. Firstly, we're going to look at the terms and conditions. The general terms and conditions of insurance contracts sets out the definition used in the insurance. It's mostly called jargon. It's the rights and the obligations of the insurer and the policyholder and the insured person, which sets out the exclusions and the terms of the policy. So terms and conditions, T's and C's, we all know them. It's the little fine print at the end of every contract. So, for example, in Santam's policy, there are about 20 general terms and conditions. And as I said, I will only mention a few due to time. So please note, if I refer to the policyholder, I may refer to you as the policyholder. And if I refer to we, I refer to the insurance company. So that'll be Santam, Discovery, all those people. So the first one I want to look at is this dodgy street. As a general person with a thinking mind, you won't leave your car unlocked on this street in the middle of the night, like in Santon. So this is the first terms and condition I want to look at, and that is the duty of care. So you as the policyholder must take all reasonable precautions and all reasonable care to prevent or minimize loss, damage, death, or injury or liability. So that's basically just what I said about the car. So you must take all precautions to minimize your risk. So the next one is cancellation. So I know it works a bit differently with the other insurance lines, but with short-term insurance, the policyholder may cancel the policy or any section at any time. But the insurance company may only cancel this policy or any section by giving you 30 days written notice of cancellation at your postal address or your email as shown in the schedule. So then the last one I want to look at with terms and conditions is information that affects the risk. So as you can see, this is a bit of a rundown house. It looks like a massive fire risk. There's some windows broken. It's probably haunted. Like it's not like the best house. So information that affects the risk is the insurer may declare the whole or part of this policy invalid if you as the client have not given us the full details of the affected risk or have misrepresented or misdescribed any details that affect the risk. So you must advise us immediately of any changes in the risk. Should there have been any material change in the risk, then we as the insurer may amend the cover and the premium from the date of the change. So if you do not inform us of the material change in the risk, we will be entitled to avoid the policy or reject any claims that occur after the change in the risk. So for this general terms and condition, the term you includes any person acting on your behalf. So for instance, that may be like in the short-term side, he handles a lot of the client's policies. So he also counts as you in on this terms and condition. So I'm not even going to go into claims because in terms and conditions, there's about 2 pages just on claims, but I will leave that in Rita Bilia's hands for next time. I just want to go to the exclusions. So exclusions are also sometimes called conditions. So your policy will include a list of conditions where the insurance company won't pay for your damage or loss. I have categorized the exclusions into 3 groups. Mostly you get your general exclusions, which are the same for most insurance policies. Then you get your cover exclusions, which is specifically to a specific section, like the vehicle section or the building section. And then you get your specified exclusions, which is different for each person depending on your individual risk. So a specified exclusion would be, for instance, if you live in an area prone to flooding, then your insurance company may exclude paying for damages caused by a flood from your policy to minimize the risk. The first exclusion I want to highlight is the exclusion on riots, wars, political acts, public disorder, terrorism, or any attempts of these kind. But luckily, this exclusion is covered by SASRIA cover. So SASRIA is the only non-life insurer that provides special risk cover to all individuals and businesses that own assets in South Africa, as well as government entities. This is a unique cover against risks such as civil commotion, public disorders, strikes, riots, and terrorism, making South Africa one of the few countries in the world that provide this insurance, particularly at affordable premiums. So on vehicle, it's R2.02 per vehicle. So we include SASRIA on all our policies that we write. So we include it at Santam, but Santam then has a contract with SASRIA. So we just pay Santam, and Santam then pays SASRIA. So the next one I want to look at is the exclusion of underinsurance. So for instance, this is a very nice house and it may be valued at 2 million rand. So for average, what I was saying is if you live in this house, you have to insure it for the value that it is worth. Otherwise, if this pretty house burns down, you will only be able to rebuild it like this. So it's a bit of a downgrade. So just in the more insurance term, underinsurance is where average is applied. So this is also a cover exclusion. It's not on all risk items, but it is in building and contents. So being adequately insured, which simply means having the accurate replacement value for your assets and contents considered in your short-term insurance cover, starts with you as the client. It is your responsibility to provide your advisor and the insurer with the correct information, including the true cost of the items you're insuring, should there be a need to be fixed or replaced. This is the first step in avoiding underinsurance. So there's a lot of ways that you can determine the value of your property. Sometimes it is necessary to get a professional involved. We are not evaluators, so we are not able to accurately determine a client's value, but there are evaluators that they can use. There's also nice tools on the internet where they can calculate the value. They ask like, what's the square circumference of your house, how many rooms, how many stories, how many geysers, and then that can help you calculate the value of your property. But to just explain underinsurance, so let's say, for example, a building is insured for 500,000 when its actual replacement value is 1 million. In this case, only half of the property is insured. So in turn, only half of the claims will be honored. So if there is damage to the value of 100,000, only 50,000 Rand will be paid out. It is therefore essential that the value of the assets be accurately recorded in your policy schedule at the time of loss. So this is for if someone is underinsured, they are not contributing enough to the pool of premiums that for the risk they are insuring. So this principle of average prevents them from sharing all the advantages of belonging to the pool and means that they will have to carry a portion of their own losses. So that's just on underinsurance. So the next exclusion that I found, we actually dealt with this at the previous company, so it was very highlighted to me. This is the exclusion of driving under the influence of alcohol or drugs. Then there is no cover. So if you are tested positive for alcohol levels above the legal limit, most car insurance companies will not pay for your claim. However, if you are involved in an accident where a drunk driver crashed into you, then the car insurance company will pay out your claim, as the incident is not your fault and you are not driving under the influence. So with this, basically anything that is against the law is also against the insurance code. And then endorsements. I think we are all very, like everybody in the short-term side, is very aware of the endorsements due to last year's claim. So an endorsement may be added to your policy due to an incident or as a result of a survey. So endorsements are mostly applicable to commercial insurance, but the one endorsement that we are all familiar with is the Porsche claim, where high-performance vehicles are endorsed so that no person under the age of 25 is allowed to drive the high-performance vehicle. And that is my presentation. So is there any questions from anybody's side?
I think on the short-term insurance side, especially when it comes to domestic, the issue of household contents comes up, and you talk about valuation. That I think that's a bit of a minefield, because I think that I myself included, we don't really go around every year diligently thinking about the value and count the things we have and value the things in the house, looking at the clothing, looking at whatever cutlery or big things and small things. How do you go about it, and how do you advise the clients so that they are properly insured when it comes to household contents?
Okay, thank you for that question, Kevin. So every year at renewal, the insurance company do increase the value of your property and the value of your contents by between 8 to 10%. So they do make provisions for inflation and like the cost of things. But from our side, when at renewal and we see that it is quite a big client, usually we would have that discussion with the clients. I know like me and Sulan had that conversation about overinsurance and underinsurance. And we also try to help clients to evaluate their risks by the tools that the insurance company give us. So I know Ed's advice to the clients is also to just once a year, take a video of everything in your house, and then you save it on the cloud, and then that also counts as proof if there's ever like almost said brand, if there's ever a fire and your whole house burns down. So from our side at renewal, we do have that talk to clients. But from the insurance side, they also make provision that inflation happens. So that's why the premium usually increases, because they also increase the value of the property. I hope I answer your question.
My next question, I know that more and more insurers are embracing technology and actually get clients to upload their documents in the vault. One that I know of is Discovery, where the clients or through the broker can upload documents in terms of maybe a purchase invoice, for example, the video you're talking about. Do you see that trend in the insurance industry? Are big insurers catching on the trend so that clients can actually upload documents or valuation certificates in the cloud, so in the event of a loss, then actually already there, instead of having to find it somewhere, because it's so natural and central. If you have your insurance policy with an insurer, you can upload the documents on the portal.
So I did see that Discovery is really embracing that. And also, Santam also has the option for you to send them the documents. It's just a bit like, I'll trust it that Discovery keeps the documents, where I don't know where Santam keeps them. They do note it on your policy, but the physical document, like in Discovery, you can see it in the vault, it's there. But with Santam, they note it on the policy. So it is becoming a trend, and I hope that more companies take like innovation from Discovery to make it easier, because like you said, like if you decide, okay, I'm going to buy this TV and it's 20,000 Rand, you can just, after you bought it, take a picture, take the proof of purchase and upload it, and then you're done. Then you don't have to like keep it in a safe, and if they break in and they take your safe, then you don't have it anymore. So that is a thing that's very nice. So we also try to save all that type of information that clients give us. Also, if there's jewelry to the value of 25% of your house contents, it's also advisable to get a valuation certificate for it every 2 years. So then they can send it to us and then we can save it, or we can, like on Discovery, upload it to the vault. So I do hope that that is a trend that is catching on. For now, I just see Discovery doing it, but hopefully in the future, everybody would do it.
Thanks for watching. Thumbs up if you like this episode and share it with your friends.